So next up, and we're in the kind of world of business here, we're looking at challenges and opportunities for mergers and acquisitions in the post-COVID stage. And I will shortly be handing you over to the moderator for that, who is Ibrahim Osta, who is Chief of Party, USAID, Bosnia and Herzegovina.
Thank you. Well, welcome everyone from around the world, morning, evening, and night. Thanks to the organizers for the event. Quite an interesting session coming up, looking at mergers and acquisitions. There's a saying that in real estate that the best time to buy is when the house is on fire. This is today's discussion. Is this true? Is it not? We have a fantastic panel of experts with us today to tackle the subject. And we're looking at some big business and cross-border investments and how COVID is impacting the mergers and acquisitions posture. The industry has come almost to a screeching halt. International travel has been hampered. Profitability, even the very survival of large investors has been threatened, particularly in the hotel sector and large real estate investments in the tourism industry. But the question right now for us is this an opportunity for mergers and acquisitions? We have an excellent panel with us today from around the world. But I would like to begin with a video that comes to us from China, from the CEO of Hiseas Tourism Group, Duma Wang. Couldn't be with us today in person due to the time difference, but we do have a video from him. So please play the video.
Distinguished guests, ladies and gentlemen, it's my great honor to speak at the International Tourism and Investment Conference. Hiseas International Travel Group is a leading European destination management company dedicated for Asian market with the biggest market share in mainland China. Every year, Hiseas Group provides our services for over 300,000 Asian travelers. In Europe, we have 8 offices like Brussels, Paris, London, Madrid. The COVID-19 impacted greatly on the worldwide travel industry. As our forecast, Chinese urban market will be restarted around October 2021. The globe will still face uncertain situation and problems. Hiseas is changing our focus in China domestic market, so we set up new business models. First, tourism plus education, provide educational tour for students. Second, tourism plus culture, cooperate with European cultural brands to land in China. For example, based on the partnership agreement between Ibiza government and Hainan province signed in 2004, Hiseas is working on introducing Ibiza's entertainment brands to Hainan. Potentially, one of our projects is to co-invest with Pacha Group and open a music club in Hainan. I would like to take this opportunity to get to know more friends in this industry, showing interest in China market. Meanwhile, we plan to make mergers and acquisitions plans in 2020. So Hiseas is keeping looking for good asset project in Europe. Finally, we wish International Tourism and Investment Conference a great success. I wish everyone a great time today. Thank you.
Nick, should we talk about assets in distress?
With pleasure.
Or would you like something else?
No, absolutely. Assets in distress or find companies in distress.
Yeah, everyone's in distress these days. Thank you. Well, now for a completely different perspective, I'd like to bring in Nicolas Mayer. He's a global industry leader for PricewaterhouseCoopers, and he's working with over 60 clients, some of the global brand names, and he works with private investors. His hands are all over the planet. And I'd love to hear from him what he's seeing right now in terms of the impact of COVID. We have lots of distressed assets. You have investors wondering what to do with idle properties. What are you seeing?
Good evening, Ibrahim. I'm seeing a lot, and I would say I'm not seeing a fully consistent picture, right? So what is really interesting looking at some of the clients or other industry contacts that I have that usually at this point would say, well, let me find an opportunity and deploy some capital to basically value invest and then ride the wave up, is usually when an investor does that, they have a plan because they say, well, I can do it better, or I have better access, I have a better network, better distribution, I'm more efficient in operating, etc. Whereas this one is right now very different, right? Because the one thing that nobody knows is, well, how from a timeline will I come out of this one, right? So compared to like previous, I would say, crises or other regional events that led to a sudden drop of property values, for example, and then to an acquisition splurge, I see a lot more caution. There is plenty of analysis going on, plenty of pre-deal due diligence, plenty of scenario playings, but it tends to very often receive a damper when somebody in the room says, well, what if COVID goes on for another 2 years, for another 3 years, for another 4 years, and when there's no answer for that. So seeing a lot of interest and comparatively little action so far.
Very interesting. Let's hear from Michel Taride. Michel, you come from long years with global companies. Hertz was your one of your key experiences, so you're quite familiar with the transport sector. Are we seeing the downturn as potentially a catalyst for more and more acquisitions than the past? In the past, you had potentially maybe overinflated assets that we were. 2019 was the best year for the tourism sector in history. And while profits were going up, also asset prices were going up. And did that deter investors? And while we're in a downturn right now, are we seeing an appetite potentially for either mergers or acquisition?
So two things. I agree with Nick that there is caution because no one knows, as he very well said, how long this crisis is going to last, and you got to sustain the crisis. But on the other hand, it's very clear that assets, the value is, it's a complete reset. Actually, they're very discounted. If you look at car rental, including Hertz, but Hertz is now chapter 11, but other car rental companies, their valuation is probably not even a 10th, even 20th of what they were pre-COVID. So it's very attractive. I've seen already a few acquisitions of companies in distress where investors can, this is a trend I'm observing. Financial institutions come and actually refinance a company in distress and convert that financing into equity. And of course, they can buy the debt at a discounted price, and the valuation of the company is also very discounted. So, certain funds, it's not the majority, but I see some private equity have actually reserve funds that they dedicate to distressed assets like this. So that's a trend. And I've seen myself, even was, helping on a couple of transactions where they had to decide very quickly because the company was burning cash to a point that they were short, they didn't have any runway anymore. They had to make a really quick decisions. That's where experts like myself came into the picture to, advise them whether the model was viable, how it looks like pre-COVID, is the technology up to date, can that business model transform? Those kind of questions that they ask and they need to answer really quickly. And that, I'd say, in phase one of that crisis. And I'll be short, but I see we have three phases here. One that was Q1, COVID hits, and companies has to stop the hemorrhage. And sometimes there is M&A activity that's the one I just described. I didn't see much happen in Q2 because when it was the summer, people were trading and they were starting to reshape and resize the company. But I think now we are entering a third phase where it's about getting out of that crisis. Hopefully the vaccine, if we, will help. And I think now we're going to see a spike in M&A under different forms. Debt to equity, consolidation, and SPACs.
Thank you. Mr. Chong.
Casey. Call me Casey. Call me Casey.
All right.
Yeah.
There you go. That's much easier.
Easy. Yeah.
I've been practicing.
Yeah.
Thank you so much. You're chairman of Union Pay International, one of the largest payment companies in the world, 178 countries, I believe, last count. What are you seeing in terms of maybe the cross-border transactions? We just heard a bit ago about the resurgence of the Chinese tourism market. Is that a barometer for where investment may be headed in the future, or potentially the source of investment?
Yeah. To start with, let me make a slight correction. I'm not the chairman of Union Pay. I'm the chairman of Union Pay International for Africa. So I'm Africa-based. Though I look Chinese, I'm an African. I'm based in Mauritius, and my market is Africa. Right? And I serve as a bridge between Asia, China specifically, with Africa, right? But
wonderful perspective. We look forward to hear from you.
Yeah. But I'm also an independent director on board of AFREXIM Bank, which is the trade finance arm of African Development Bank, right? So trade finance, as you would have guessed, has suffered tremendously with COVID because of a disruption of logistics and supply chains all over Africa, which is already poor in infrastructure. So that's for background. Now, in terms of China, right, the Chinese, as you know, with the war with the US and all the standoff with some European leaders, right, is
I think we lost the connection.
Yes.
Casey, can you hear us? Well, until we re-establish the connection, let me go to Nick. Nick, are you seeing new maybe tools for mergers and acquisitions, any special purpose vehicles or otherwise?
There's a fair amount of discussion and new buzz again that comes around SPACs, right, which are these special purpose acquisition companies. Which I think Casey is back. Do you want to hold this question?
Yeah. Nick, don't forget the question. Casey, we'll go back to you. Yeah.
Okay. So as I said, a lot of these transactions got cancelled or postponed. And with a crisis going on, and also with all the big hype during the pre-election period in the US, the slowdown in these potential transactions has been accentuated. So from the perspective of China, we can see there's a big interest from the buying side, but because of the sell side showing some resistance, so there has not been much things going on. This is what I can say about China. Now, with regard to digitalization, we heard, I forgot the name of a guy, Mr. Dong, I think, Mr. Wang, talking about the process of digitalization and all the web-driven promotion that is being done in China. So with regard to the travel industry, China is still very well developed. And we can see more and more development in terms of strategic partnership and acquisitions going forward, because China is well advanced in its digital tourism development. And I think there's a big future in M&A activities with China in terms of travel tech, right? Now, with regard to the African perspective now, I must say that this has been very, very, very severely hit. I think tourism has fallen by 70 to 80% in terms of turnover and in terms of its contribution to GDP, and also in terms of job losses, right? And this is going to create a huge problem and big impact, not only in terms of income levels, in terms of inequality, but also in terms of preservation of nature. Because what do they do when they have no jobs? You know, the forest ranger or the conservationists and all these people working in the tourist industry, in the nature-based type of tourist destinations. I mean, we are very, very wary of the impact of tourism. And this is where I think there will be big consolidation, big time in Africa, right? And this is going to accentuate the problem, because then it means that the big boys will eat up the small one. When the time has come for actually a diversification of the tourism industry, where people are looking for, you know, life experiences, looking for, you know, new ventures, and you have a big surge in the traveling of millennials. So there would have been big opportunity for this either management buyouts or for, you know, medium-sized, more innovative type of travel players, operators coming into Africa to do businesses. But I think now, because of a lack of visibility, because of the impact of this pandemic, I think all this is stalled. And I fear that the picture is very, very bleak for the coming 1 to 2 years. So that's how I see the opportunities. As we say in Chinese, any crisis, you know, have its challenge and its opportunity. The opportunity is still there, but I see more challenges than opportunities for Africa at this stage.
Not just for Africa, for a number of destinations. I want to go to Michel and discuss maybe small businesses and medium enterprises and even startups in this new ecosystem. But before I do that, let's go back to Nick. We started discussing the SPACs. If you can just, for those who are with us today, just a quick definition of the SPACs, how they're different, and tell us how maybe they're increased prominence or maybe not. Please.
I didn't know it was going to be a quiz. So let me see if I can get it together. So a SPAC is a special purpose acquisition company. Basically, the way the mechanism works is the following way. It's a mechanism that allows you to basically raise public funds ahead of doing an acquisition, rather than first trying to do the acquisition and then trying to go get the money. So the way it works is you list your SPAC on a stock exchange. Usually there's a management team that has the initial idea and then places 80% of the shares, and usually a warrant as well, of the SPAC in the market, just like an IPO, just like an initial public offering. But at the time where people buy it, the target is usually not yet known. Usually a geography may be known, or an asset class, but even that is often relatively vague. Then the management team has a predefined period, usually between 2 to 4 years, I think is what I've seen historically, during which they can search a target, make the acquisition. You need the approval of the shareholders. And then if you successfully do this, you've automatically listed it through the SPAC. Then there's a so-called de-SPACing, which is one of the cooler words in finance, which is basically when you convert the SPAC into a regular listed entities, and then it's cruising as normal. So that's what a SPAC is. And the reason why people talk a lot about it is because it's a way for private investors to get into the private equity game or space, if you so will, because that's the kind of behavior a SPAC usually does. Now, you asked, so that was the definition. Sorry for that, roughly.
You passed the quiz.
Thank you. Is it so I think that I read more about them than I actually see them in action. They do exist, of course, and they get transacted right away. There is a history also of them being used in hospitality and real estate acquisitions and mergers. They're neither good nor bad. They're just another way of raising capital and giving people access to a certain transaction. If you ask me how are they being used in the current time, I mean, the one issue that I see with them, which is a quite important issue, is this definition usually of a time frame now of acquisition. Now a SPAC can be extended, right? And then you need shareholder approval, etc. But investing in a as of yet determined acquisition target for an indeterminate time, in a time where there's an external crisis that you don't know how long it lasts, for an outcome where your asset may or may not still be attractive, you simply got to realize that, as most private equity, is a very, very high risk investment. And during the time during which you have invested your money in the SPAC, waiting for the acquisition to happen, that money is also not available for you to ride up a normal stock market raise that you may have. So there's an opportunity cost to it as well. So I would say, I'm definitely not giving investment advice, but where I've seen SPACs be successful is where the management team was very, very good. That's this initial team that usually already, of course, has a gut feel. They tend to come out of this industry. Maybe they have a few targets in the back of their mind already. They really are able to read the market, the product, the geographies. If you have a good management team that has relevant experience for the type of acquisition target you're going to do, then that could be very cool, right? And that's where I've seen it succeed. But again, it's a complex topic, and I would not be sure that I would be able to recommend or not recommend it. But it is having a resurgence here, quite definitely.
Oh, it has its uses. It sounds like you need a certainly an experienced management team, as you say, but probably the asset is being sold at kind of a fire sale price in order to make that almost speculative description worthwhile for the risk. You'd be looking at a deep discount.
You ask me? Sorry.
Right?
Yes. Well, look, the thing with the fire sales always is, I mean, often things are on fire because they were built out of very flammable material, right? So not everything that dropped in price is only a victim of COVID. Often it is an acceleration that happens because of COVID.
Right.
And for many, many objects, be they companies in the travel space, be it assets in the travel space, you simply don't have a guarantee that value will come back. But that's the nature of investment, right? I mean, especially value investing. But I think one discussion I had at an earlier panel is I'm not sure that I subscribe to the general certainty that everybody has that travel will come back in the same way it has been, to the same level it has been in all the places where it has been, right? That is certainly a desirable wish, mostly, but that's not the most likely outcome. I mean, places like China are going to come out booming. Places that cater to business travel may actually never recover to the full levels again because some of that travel may go away. Right. New products may have a boost, etc. So I'm just, you gotta, when you talk about fire sales or distressed asset sales, and there's certainly a lot of this going on, this is a crisis that is perhaps slightly different than some of the last ones because it's probably not just a bump, but it is a bump that is followed by different curves for different segments of the industry. Right.
Michel, there is now a resurgence in the, or I should say, a bigger intersection between technology and tourism. We're moving into e-commerce. We're moving to touchless technology. We're seeing a great deal of VR and other technologies being used in tourism. Are we going to see more IT firms maybe entering the tourism sector, or the other way around? tourism companies that may see it as an opportunity to come in and maybe invest in some innovative tech firms, not just for their own use, but potentially for sale to other companies?
I think we're going to see both. Before I just start, in fact, I'm getting involved into a SPAC. So what Nick said is absolutely real. It's I'm on it, and it's a SPAC that is being floated. The IPO will take place very soon. I can't talk too much about it because you got to keep it confidential. But it will be a SPAC in travel tech, which will be public in probably a matter of weeks. That's what wonderful. I can say.
Looking forward
it's
to
an interesting formula. It's indeed 2 years. It's almost like risk-free for investors because they got to approve it. And if a deal doesn't happen within 2 years, they get their money back with some interest. And what I like about SPAC is very focused on one target. And you look for a target and you effectively merge it into a SPAC and then you unspac it, as Nick very eloquently said. But yes, it's real. I would just say this, it's very prominent in the US. We are at record levels of SPACs right now. It was a few years ago, then it went down a little bit. There's been a few failures and learnings, and right now it's booming. And recently there was a SPAC where $5 billion was raised by a hedge fund manager quite well known called Bill Ackman. You can see that on YouTube. And because I'm in transport, you said that in mobility, there is one which is Nicolas. It's like a truck. They just raised $1 billion. So yeah, it's interesting. So we can talk more about it in the future. Now, coming back into tech, I work a lot with startups, and startups are good because they are run by millennials and sometimes older guys like myself, but they show the trends, and the trends in travel are a lot of, and I will come to what does it mean from a technology standpoint. I think we're seeing a lot of aggregate. I think Casey talked about that. Millennials want experience, local experiences, and therefore the issue with experiences is beautiful, but it's very fragmented. You have thousands of experience providers around the world, and you got to aggregate those experiences and make them available online in a simple way, B2B or B2C. So technology can solve that issue through APIs and AI a lot, because experiences need to be tailored to one's desires. Second, I see slow travel. I see family travel. It's not easy to travel as a family, so I'm involved with a startup that does that. Sustainable travel, and certainly, excuse me, from an operating standpoint, digitize the experience. That was already going on, but now there's no choice. It's got to be accelerated. In my former world of car rental, we were working already on having a fully, to use your own word, touchless experience. This is now coming. So it means that, I think a lot of tech companies are now going to go into travel because certain businesses are not as advanced as others. I think in even airlines, car rental companies, obviously, even a seamless journey. I'm an ambassador to the WTTC. There is this, this pilot around seamless journey. How do you go from your home to your point of destination, not even showing your passport? So right. The data, health data, and ID need to travel seamless. So that's where technology come into the picture. I think AI and AR and VR are also very prominent. For example, I'm involved with an AI company that actually was very strong in telecoms and now is going into travel. That's why I said I think both are happening. Right. And when it comes to acquisition, I think companies and funds will look for technologies that are transferable from right. travel to other industries, because it's true that sticking with travel right now, it's a little risky. Who knows what's going to happen? Will there be another virus or another shock coming our way? So I think technology can be used in different verticals. That's what I observe, essentially.
Thank you. Casey, we have 2 minutes left, and I would like to get your views on the potential mergers or acquisitions for maybe vertical integration between and the hospitality sector, or do we see potentially mergers and acquisitions between hospitality and airlines? Are we going to see some of that, you think? You're muted, Casey. There we go.
Sorry, you see, technology, eh? Right. Okay. So I think we're going to see more and more of that, right? Especially through now, everything is very tech driven. But also, I see that there's going to be more diversification in the industry, right? Because although there will be on one side big consolidation between aviation, travel, and tours, but on the other side also there will be more fragmentation because people are looking for niche, niche compartments. So this is where tech will come in a big way. This is the trend that I see. Let me quote just one example. I know a Mauritian guy, Mauritian being a small country, right? A Mauritian guy who has been to Japan and who had tried to travel, he's a millennial, and he has found that it was a problem, taking one train company, because in Japan, the rail system might be national, but the train companies are privately owned in different companies. So it was difficult to get a ticket from one place to another place to change to another train and correspondence. So he worked out a system where he could integrate everything, and with one ticket, you can go everywhere in Japan, right? And he's made a fortune, right? So I see more and more of this going, and now he's merging it with other activities like with coffee shops and others for millennials. So this is going to be a big trend going forward. This is one side. The second thing that I see is the role of China, right? China is exploding, right? Now after COVID, there's nothing worse than getting a Chinaman, close up within his country or within his one business, because he wants to see the world, he wants to conquer the world, he wants to buy the world, right? So the one it's very good talking about SPAC and others, which is for all the institutional investors in China. But you also have some very big high net worth, big business tycoons in China who are looking for this type of new opportunity, because China has moved from manufacturing, heavy engineering, now to soft tech, to lifestyle living, and to leisure. So I can see more and more possibilities and opportunities now for Chinese to go into Europe, into the Americas. And this is where we need to have this bridge. Wang has given a very good presentation. We need to have a bridge because the Chinese don't understand the culture, the business customs overseas. So he comes here as a big boy and he wants to buy, the Empire State Building, Waldorf, and things like that. But I think there are other ways to try to see how to match this buying frenzy that is going to come up from China with what is needed in the West, right? Because the West need to be rebuilding its tourism, reinvent its tourism, and the Chinese, they are so keen to go out, and you have Union Pay, you have WeChat, you have all these technical devices that can help them. So that from his country, he's already downloaded all his information. He knows where he wants to go. He chooses what he wants to do. And so we need to have this seamless experience with local parties. And this is the most difficult part for the time being now, because you don't find a local party who can match the desires of the Chinese and the offerings of the West.
Thank you so much. I want to thank all of you for a fantastic set of perspectives on investment. Some of it might be a bit more difficult to forecast given the fluid situation we're in. What I can sum up my understanding from what you said is that investors, just like tourists, just like policymakers, are looking for the light at the end of the tunnel. However, when you exit the tunnel, you do not exit where you started. So we're looking at a new tourism industry. We need to look at the reinvention of tourism. Tourism economies need to plan differently. We need to take account of the need for technology, the differentiated experiences. How can we deliver these while at the same time finding the distribution channels to reach the individual consumers, the FITs that are looking for niche experiences, yet at the same time, they have a channel to learn about them and to actually book them. But for investors, are there opportunities to somehow aggregate these different experiences and provide these platforms, just like Airbnb did, selling homes, selling apartments, and even beds? Potentially that could be the same thing for a variety of other areas. Again, thank you so much for your contributions, Michel, Nick, and Casey. We look forward to seeing you again.
Thank you very much.
Thank you.
Thank you. Thank you. Bye-bye.